Welcome to Finance Today. Today we're going to be talking about shorting stocks, which make you as an investor money when the value of a stock goes down. The ability to short stock is going to be very valuable right now because all across the economy, we have certain stocks plummeting in value, share prices dropping, and we have this new work from home economy which has recently emerged because everybody's staying indoors and still continuing to do their work. So some of these work from home stocks are becoming a little bit overvalued. In order to short stock, you have to be approved to trade on margin through your trading platform. You're going to have to apply for this and then wait for them to get back to you. But basically what this is going to allow you to do is sell stock that you don't own, and it's going to prove to your trading account that you have enough money in your account to buy that same stock back at a later date. I know this sounds confusing, and the mechanics of shorting a stock can be for people who are just getting started, but we're going to break this down in the easiest example that I know how to do. So these are the mechanics behind shorting a stock. This is you in the middle here. This is March 26th. So the current value of the stock in question is $100. You have this brilliant idea that the value of the stock is going to go down. So this is how you do a short on the open market. You sell stock without ever owning it by asking the market to borrow a stock. So you're going to borrow one share. You're going to take that stock and you're going to sell it to the market. Sell stock at $100. So what happens right now is you suddenly have $100 in your pocket and you owe this guy over here one share of stock back. Now let's jump to the future. It's now April 2nd and you are correct. The stock is now worth $50 a share. So what you do to close your position and capture those gains is you have to buy that share of stock back from the market. So you're going to buy the stock back, buy stock at $50 from the market. And then you're going to give person A the share of stock back that you originally borrowed. So if you're purchasing the stock for $50 and then giving it back to the person who you borrowed it from, you're keeping an extra $50 for yourself. Those are the mechanics behind shorting a stock. So there you have it. That's how you short a stock. Now, I have to let you know that shorting is considered much more riskier than going long on a stock, because if you look at the markets in general, they tend to appreciate more than they depreciate. So you really want to think through any ideas you have about why a company is going to fall in value before you take your position. Another risk associated with shorting is your trading platform can do what's called a margin call to your position. This means that if you short a stock at $100 and contrary to your beliefs, the stock keeps increasing in value, the platform that you use, the trading platform that you use, can automatically buy that stock back for you without your consent. Now this can lose you a lot of money. Another risk that's associated with shorting is called a short squeeze. This is something that you never want to be caught in. A short squeeze, to put it very briefly, is when everybody with a short position on a stock is rapidly trying to buy their shares back to cover their positions, and this skyrockets the price of the stock. This can be terrible and can lose you a ton of money. All in all, the ability to short a stock is an extremely valuable tool for your investment arsenal. It can make you a lot of money if executed properly. If you have the inside track on a business and you know that it's going to zero for some reason, you want to short the stock. You want to short it and then cover your position and take your gains. Just a disclaimer, that was not a suggestion to trade on insider information. That's illegal. Don't do it. As always, thank you for tuning into Finance Today. Don't forget to comment, throw any questions down at the bottom, like and subscribe to the channel, and turn on post notifications for our upcoming content.